So many challenges, so many opportunities. Challenges from climate change to cyber risks. Opportunities from new data streams to ecosystem plays. So, in this ever-changing context, what does it take to successfully grow digital businesses? In this talk show, hosted by McKinsey partner Lida Zaharieva, InsurTech executives and investors representing a broad spectrum of experience in the industry, from cyber to embedded insurance, will discuss their perspective on winning business models and innovation themes in insurance.
Good afternoon, everybody. I'm Leda. I'm a partner at McKinsey in our London office. I lead our work in the InsurTech space in the UK, and I work at the intersection of private equity and insurance across Europe. I'm excited to be with all of you today and with my co-panelists who represent a diverse and really exciting part of the InsurTech ecosystem. Today, we're going to talk about how to successfully scale InsurTech franchises. If I reflect on last year, being at ITC in Vegas in September was one of the professional highlights. It gave me a lot of energy. It was the time after the so-called InsurTech winter, when the stock prices of all the publicly listed InsurTechs came down through the floor. However, there was a sense of optimism and energy in Vegas, which indicated that there is much more to the vibrant InsurTech ecosystem that we have. So we're going to talk about that today. But before we start, I'd like to ask each of the panelists to introduce themselves and share what excites them about being here in Barcelona.
Well, it's exciting to talk in a nightclub and have an intimate conversation. So my name's Graham Newman. I'm the CEO of CFC. I think we're the world's largest independent MGA. So we operate in the field of commercial specialty insurance. So everything I say will be through that lens. We particularly focus on areas of new and emerging risk. So cyber insurance is our largest class of business, but we do write 25 different lines of insurance in 90 countries around the world, all predominantly aimed at small and mid-market companies. So yeah, that's me.
Hi everyone, I'm Dominic, and I'm Managing Director for Insurance at Booking.com. If you haven't heard of Booking.com, we are a global travel platform, and you can book hotels and flights and attractions and cars through us. I take care of insurance, where we're building out our retail offering as well as our partner offering, and because we're a two-sided platform. We take care of people traveling, but we take care of the service providers as well. We're unique in that we have launched our own MGA model. That's why we're here, and looking forward to speaking to many of you and learning more about this universe.
Yes, I'm Stefan. I'm the founder and CEO of Kamet Ventures. Kamet is not a venture capitalist. Kamet is a venture builder. So we are building companies with great entrepreneurs from the ground up. We are originally backed by the AXA Group, and we are now fully independent. We bought back AXA 2 years ago. And we are building 3-4 companies per annum in between Tel Aviv, London, and Paris. We have a few companies here. By the way, Accurate, that was mentioned by Phil on the pricing solution, is one of our company. I'm the chairman of Accurate, and we have 20 companies spanning mostly a third in InsurTech and 2/3 in what we call health tech. But some are in between insurance and health. And many of them are now scale up because we started 6 years ago. So we are lucky to see them grow as fast as they can.
So let's talk about what does it take to successfully scale a digital insurance business, and let's set the ambitions high, what it takes to create a decacorn. Graham, I know that some of your shareholders already have the target for you to be a decacorn in 2-3 years. Dominic, you're working at a company that has been a decacorn for a decade, and I'm sure, Stefan, you are also aiming to build a decacorn amongst your companies. So maybe we can start with you. What does it really take to scale a really ambitious InsurTech business?
Well, we don't have the ambition to build decacorn. I think these gentlemen are part of decacorn. We have more modest, let's say, ambition. You know, we start from zero, as really at the seed, pre-seed phase, when we really create the ideas. Our biggest companies are now like 50, 70 million ARR. It's mostly software, what we do. But we never really looked at our business at, valuation. And I think that valuation, the recent times have shown that it goes up and down. We want to build sustainable businesses that can deliver value. And as a profound hypothesis, we never really went through what we call D2C. There was a kind of hype 6-7 years ago for all these big incumbents would be destroyed or let's say disrupted by a pure B2C proposition. I always thought, I was at AXA before I was a member of the group executive committee and doing what Phil is doing at Allianz. I mean, running the direct business. And I know how difficult and how scale you need to be profitable in this kind of B2C business. So we focused on really building software proposition more as enablers. So most of our businesses help these big giants or MGAs or platforms like Booking to do a better job at what they do. Should it be in pricing, in fraud, in whatever topic? So this is what we do.
And Dominic, how does it feel for you?
I'll answer from a narrower perspective rather than the industry perspectives that I'm sure many of you are familiar with. But from our side, it's truly trying to solve the customer problem end to end. I think if you're really going to generate that kind of value in the kind of space that Booking.com is, it's being able to take them from point A all the way through to point Z across the entire insurance journey, across the entire value chain. And I think doing that comprehensively, and that doesn't necessarily mean owning it, but it means feeling responsible for it, I think is how, certainly in our world, we're really trying to unlock that kind of value at that kind of level.
Yeah, I suppose for me, I see us as a 23-year-old startup. And I suppose that's the first point. I think if you're creating a decacorn, it doesn't happen overnight. And I know that it's very, very trendy, obviously, Silicon Valley concept of blitzscaling. And I see a lot of people coming into the insurtech market and they feel the pressure, often from their VC investors, that they have to grow top line incredibly fast because it's a winner-takes-all market, and that's critical to succeeding. And I just don't think that insurance is a winner-takes-all market to start with. It's also a complex market because it's one of the few markets in the world where you don't know the price of the thing that you're selling at the point in time in which you sell it. So that adds a level of complexity. And when people ask me kind of what do we do for a living, what's an MGA, I said, well, we're really like an investment advisor, an investment management company. We have customers on two ends, and to survive, we need raw materials. And our raw materials, it's capital, it's cash, it's investment. We're required to hold a certain amount of capital to write a certain amount of insurance risk. And the people giving us capital need to get a return. So it's easy having a great idea, but the reality is I have to prove to somebody that I can get them a better return for the level of risk they're taking than they can do from somewhere else. And that's the challenge that I think that a lot of people forget about. So being able to prove that you can get a better return. If I was an investment manager and I said to you, I've never actually done any investments before, I've never managed any investments before, but I know a little bit about technology, so I can do that quite efficiently. And I can take as much money as you've got, frankly, and I can invest it for you, and I can do that really quickly. You actually aren't going to give me any of your capital. What you need to know is that I can do that for you profitably. So it takes time to build reputation, to prove that you actually have something that's unique in the market. So I've heard a lot of presentations today where people tell me they've got a unique approach to underwriting. But you have to prove that through data that will deliver a return to the investors. That's the only way that I think you can grow and sustain a scalable model in insurance. And maybe one last word on this. I think a lot of insurtechs start being monoline, mono-country, mono-carrier. And I think that only gets you so far. There was a presentation from Allianz just before. To scale to be 10 billion plus, to be an insurance company, you need to be diversified. You need to be multi-line, multi-country, multi-capacity. And I think that's, at that point, you started to build some level of competitive advantage.
And that's quite interesting, isn't it? You're talking about the importance of capacity in this market. The importance of capacity in this market and being an attractive proposition, both to your equity providers as well as your capacity providers. In a lot of our research, we have seen that many of the insurtech's challenges are on the capacity front, because many of them are trained in creating a good equity story and getting the initial funding, but to sustain themselves, they need the capacity. And Dominic, I know you have a very different perspective on capacity. So can you share a little bit about what is the role of capacity providers in bookings growth?
Absolutely. So we've seen both ends of the market when it comes to capacity. The obvious product that you're all thinking of is travel insurance. It's like loads of capacity out there. Every insurer doesn't mind writing loads of those policies. So when we went out to market for that one, didn't take very long at all. Shortlist kind of wrote itself, and off we go. But we've also done lots of other areas where we face very similar challenges, where we've come up with new products, new ideas, and even with credibility, with data, with historic experience and those kinds of things, it's difficult to get through the door. It's difficult to even find which desk you should go to have that conversation. It's difficult to convince people this is a new thing. Don't dust off a separate underwriting model or pricing model and try and retrofit it. Work with us on something new. And I think that's a really difficult challenge. And we've still got bloody brilliant products on the shelf because there's no one out there to write them. And we're in exactly that phase. We're writing business. We're writing simple business. We're writing simple business to build that credibility. And then we're going to go out to market with some of the latest and greatest. But we're there on that journey too. That's our capacity story.
And if we think a little bit broader about the challenges and the opportunities in the insurtech space, we see, including from Phil's presentation, and as you also mentioned, Stefan, pure direct B2C models are no longer the end-all and be-all of insurtech. We see a greater variety of business models out there, including pure software plays, as you mentioned. We also see that for a large number of insurtech, scalability and getting to customers is a core challenge. But on the other hand, we see the rise of embedded as a really important opportunity. And I know that for each of you, embedded has quite a different flavor. Well, it's at the core of your business model, Dominic, isn't it? And I know, Graham, you're working at some exciting embedded opportunities, and you also, Stefan, have interesting perspectives there. So can you tell me what excites you about embedded and the role that it plays in scaling insurtech business models? Maybe let's start with you.
Yeah, I think you are probably better placed than I am, but I really believe that what we call embedded insurance, meaning having insurance sold and distributed by players like Booking and like many others, but as part of their own journey, as you know, embedded in their core proposition as a way to improve their own proposition and as a way to create for their business kind of ancillary benefits. I think this is clearly a big avenue going forward. It's something extremely big. Now, there are the capacity providers, the traditional insurance players, the end customers, the platform, and there are spaces, I think, for some insurtech to really be this stack of technology, of enablement, sometimes of more than this, to facilitate a kind of end-to-end ability to deliver the proposition. But you are probably much better placed than I am because you do it every day.
How long have we got? I can talk
16
embedded. I can talk embedded for quite a long time. I'm sure you can all guess. And embedded is a word that's thrown around very liberally. I think if I had €1 for every time I heard embedded, even today, I'd have covered the cost of my ticket. And for us, embedded is, of course, embedded at the point of purchase and made in one transaction and super easy to transact. But frankly speaking, that concept has existed in travel for decades. We call it ancillary revenue. For us, embedded is one step further than that. It's not just point of purchase. It's customer service, and when you call us, there's no warm transfers or cold transfers. There's no transfers. It's when you click My Account, your product is there. It's tied to your reservation and your booking. It's completely it completely flows through. Your claims are not paid in a check 3 weeks later. They're refunded to the card in which you used to pay. That's, to us, what embedded means. And that's why it's so important to us and why we live it every day. But it doesn't, to us, just mean point of purchase.
So obviously, embedded's the dream, right? Super frictionless insurance, Your customer doesn't even notice it because it's the perfect service, like we'd love to do embedded insurance. But maybe to give a different perspective to the other panelists, I live in the world of commercial specialty, and cyber insurance is a big part of that. And I hear so many bad embedded insurance ideas. And embedded is starting to remind me of blockchain, right? Remember when that was the thing and you didn't have a business unless it was on the blockchain? And that was the solution. And then it was parametric cover, right? Because that's the solution to all our problems. And now, my friends, it's embedded. So if I had £1 for every time I had a global cloud service provider say, we have clients who use our cloud and they have technology risk, and so we would like to sell cyber insurance through our cloud platform, I'd have £3 and not much more in premium. So the challenge there is embedded to me has to work because the buyer has to be using that channel. And when it comes to commercial specialty and a product like cyber, the CTO doesn't buy that product. It's still the CFO or the CRO. The fact that you have data doesn't mean that you have a solution. There's lots of data. There's a business in the room right now, I'll never forget, it was the only meeting I walked out on, when they told me they had 1 trillion data points and that Lloyd's would be dead and we'd be dead because we had so many fewer data points. It's like if you have 1 trillion useless data points, it's not going to make you any better at pricing risk. So I think if you're doing embedded, the product has to be designed so it fits that distribution channel. And I think that means completely different product architecture. You can't take a standard insurance policy, embed it in alternative distribution, and tick the box that you're doing embedded. The customer journey, the pricing has to be completely different. It's a specialism. It will fit in certain places, but it doesn't fit in every place. And I also just one, I suppose, other comment on distribution, because embedded's connected. I think as an insurtech, you write off insurance brokers at your peril. I've been in this industry for 20 years, and I've been at conferences like this for 20 years, and every year the broker's dead. And yet this year we hear Hubs hit a record valuation of 30 billion, Acrisure 25 billion valuation. These businesses are thriving, and Silicon Valley thinks it created the pay-per-click model. Yeah. Well, insurance brokers for me are the pay-per-click model. We pay them on success, and they're incredibly good value. In commercial specialty, they're an excellent route to market, so that's still our preferred route.
Yes, yes. And I think that is in line with our research. I fully agree with you that the demise of Lloyd's and the demise of insurance brokers has been overhyped, and we see that they are at the core of creating a much more thriving and successful insurance ecosystem.
Yeah.
Yeah.
And maybe if I can pick up on Lloyd's quickly, because we're talking about platforms, we're talking about access to capital and capacity, and I know people in this room will be looking at where do I find capital and capacity. We've grown a $3 billion market cap business based upon the Lloyd's insurance platform. Sometimes the Lloyd's market can be its own worst enemy when it comes to publicity. There's a lot of talk about it being hugely inefficient because they've got big drives towards efficiency, and it's a 300-year plus market, so you associate that with legacy and inefficiency. But it is far and away the most capital efficient platform on the planet. Allianz is close, but it is the most capital efficient marketplace on the planet. It can give you access to global licenses, 100 plus global licenses at almost zero marginal cost. So for me, when we're building an insurance business, what's our platform? This globally licensed, regulated platform that can give us access to the world's insurance at a capital requirement that is a fraction of what you might get with an offshore reinsurance vehicle with an AM Best rating. It's phenomenal. And I don't think that Lloyd's talks about that value proposition or that value add enough.
Yes, you're absolutely right. And you're actually hitting an important point that you need an underlying platform that enables your scalability. In your case, that's Lloyd's. In your case, that's Booking.com. Where I wanted to ask Stefan a little bit is, you're obviously investing in B2B models, software propositions for the large carriers. So can you tell us, I think that Graham and Dominic represent the point of view when we're selling an insurance product, and you represent the point of view when we're selling a product to insurers.
Yes. I mean, insurance companies want to reinvent themselves. I've been on the other side. I've been a senior executive at one of the largest insurance groups in the world. And by definition, insurance companies believe they can do everything. But little by little, they realize that all this technology is very complicated and that the world is moving fast, and that if they find good piece of technology, and they will adopt it. So I think that by finding and by solving pain points, very, very clear pain points of insurance companies, you can build tremendous companies. And I mean, the one that was mentioned again by Phil, and that is just next door in this, which is now already, I think they have 80 insurance companies, customers globally. It's a cloud-based pricing platform that is used by thousands of actuaries in the world, just to enable them to do better pricing every day when they price their risk. This is typically something that when you have a good product and you have the chance to have an initial good, what we call design partner, so a customer that will help you adjust and find exactly the right proposition, then you can scale very fast. And I think today is probably easier than it was 5 years ago, because a lot of large insurance groups have tried things, have failed in most of the cases, and I think there is now more, let's say, of a burning platform to adopt proven piece of tech or data that can be used to leverage their own business.
Okay, very interesting. And Dominic, I wanted to ask you, from your perspective, how do you see the partnerships with traditional insurers?
Painful, but useful and important, I think, is probably the three. The order changes depending on the day and whatever call we just had. Look, like I said, we have a mixture of products, right? We have traditional retail products, and there are companies out there who have done that for decades, know it incredibly well, have the depth and volume of experience and operational setup that just can't be matched without an equal amount of time. But that adaptability, the belief in being able to do something that's genuinely new, to re-architect the products that you want to fit the landscape that you're in, yeah, that's a bit more of a challenge. And bluntly, part of the reason why we're here is to try and see what else is out there that can assist in being able to change that landscape just a little bit quicker. And that's one thing I will say, is that the incumbents, the traditional insurers, they will get there. It might take them dragging, kicking, and screaming, but it's going to happen at some point. And we're at a point in our own journey of deciding whether we want to be the ones dragging or whether we'll find someone else who's willing to do it. And so I'm interested to see how this evolves over time.
Yeah. I would say, I think there's an interesting trend that I think for a period of time, insurance companies are all seen to be vertically integrated insurance companies, from distribution to product to capital management, and that was seen to be what an insurance company was. And we as an MGA were always seen as a kind of second-class citizen. We were some weird entity in the middle that was neither a broker nor a carrier, and therefore must be inferior. And yet now increasingly hearing that that's the business model of the future, and actually being a capital-light insurance company is the way to go. And we're seeing the development of platform-based insurance businesses that have no distribution, that have no product development department. I think some are presenting here today that essentially are capital managers for a living. They manage the licensing and the capital. They'll perform the actuarial function. And essentially, as I talk about Lloyd's, it's kind of a similar platform to Lloyd's to do that. And Lloyd's businesses are changing that way. And then the MGA sits on top of that and provides that service infrastructure. And I think that's allowing businesses to increasingly specialize and do the bit that they do best, and outsource the bit that they don't do well for a living to a third party. And by building those partnerships, I think you can build a world-beating insurance business. Whether that's called an insurance company or not is a moot point, I think.
So that's an actually really interesting point, because when we look at valuations and also the rising investable themes, we see a lot more dislocation and a lot more disaggregation of the business model. And we see a lot of the ventures, growth equity, and private equity companies looking for balance sheet light propositions on one side, and a lot of asset management companies looking for opportunities in the balance sheet space. And we see a lot of creative transactions like the Fidelis transaction that disaggregates the balance sheet from the distribution and the product creation. So I think that's a really interesting point. lastly, maybe to wrap things up, I wanted to ask each of you, what are your priorities for the next 12 months?
Please. Finding the right partners and scaling them out. We have a really strong foundation that we've spent the last year or two building out for ourselves. And we're at the point now where we're quite keen to actually push out all of the new and more novel things that I've just spent some time talking about. And so for the next 12 months, it's that.
Okay, fantastic. Stefan?
Well, for us, it's really more of the same. On the existing set of 20 companies that we built over the last 6 years, it's really helps them, grow to the next step. And in creating new companies, our topic at Kamet is not really to find good ideas. I mean, we saw that there are many opportunities, and we have a very deep methodology to really crack these opportunities. But then the key is to find the right partners. For us, partners being entrepreneurs that join forces with us for 10 years, because it takes more or less at least 10 years, maybe not, 23 if you want to build a decacorn. But we stopped, at $500 million. We are happy when we exit at $500 million. So let's say 10 years, and it takes 10 years. And to execute, great proposition, we need great entrepreneurs.
And what attracts great entrepreneurs to insurance? Because sometimes it's seen
we have
as
plenty of them. There are plenty of them. It's a big industry. It's full of opportunities. It's probably one of the most exciting, I think, industry to be an entrepreneur in.
I really hope more and more people believe that. So, Graham, what are your priorities for the next 12 months?
We've got a few, but what I'm excited about is trying to industrialize the process of insurance innovation. And by that, I mean, actually, how do we strategically find not the insurance products for the next 1 to 5 years? I think we've got that down. That bit's kind of relatively straightforward. Is how do we find the breakthrough ideas for a 5 to 15 year horizon? Because despite popular belief, there aren't hundreds of multi-billion-dollar undiscovered insurance markets out there. And cyber is one of those newer multi-billion-dollar markets, but there aren't hundreds. So what's the next cyber for us? And finding that and having a structured methodology that allows us to identify that and attack that and build a level of scale and competitive advantage in that class before the very large, very capable, very well-branded incumbents get to attack that market is the game that we're in. So I often say we're lucky in insurance because we don't have to build manufacturing plants. We're not looking at kind of building aeroplanes with 20-year return periods on them. We can be quite nimble, but we are at a real risk if we don't identify the trends that we're going to see in 5 to 15 years' time and build the advantage today, because trying to do that in 10 years' time will probably be dead.
Fantastic. Well, thank you very much all for the interesting discussion, and enjoy ITC.
Thank you all.
Thank you.